And as Eric mentioned, the Strait of Hormuz may close. And in fact, oil futures are spiking in reaction to the turmoil in the Middle East. And investors do fear that Iran would disrupt what is global shipping via the Strait of Hormuz. Now, that channel is the only way to ship crude oil from the Persian Gulf to the rest of the world. 20% of the world's oil passes through the strait. Any disturbance will have a significant impact on the global economy. Only Iran's National Security Council has the authority to close the strait. CBS News contributor Javier David joins us now to talk more about this. He's the business editor for the Dallas Morning News. Javier, good morning to you. What would happen if this decision is made in Iran to close the strait? What would happen next?
Yeah, look, we have a sort of a war on two fronts now. We've got one that's policy based. It's all about the tariffs and the trade war. And now we have this armed conflict that is spurring the price of oil. So just to throw some numbers at you, Brent crude at the start of the month was trading around $62 a barrel. We've now built in a quote unquote war premium of about 30% to nearly $80. So commodity investors are kind of having the best time that they've had since the start of the year. But these are real economic risks associated with this. You'll see more than likely a lot of analysts are building in the possibility of a run at $80 a barrel, $90 a barrel, perhaps even above $100 a barrel. And under the most extreme scenarios, that adds about $1 per gallon to gas and diesel prices. So these are real and sustained risks.
And we see gas prices usually increase in some cases over the summer, in many cases anyway, just because of the increased demand. Secretary of State Marco Rubio said it would be economic suicide, though, for Iranians to shut down the strait. That would be an expected reaction. How likely is it to happen, do you think?
Well, look, this is a very high likelihood. Iran was blindsided and really humiliated by these strikes. They're vowing to make the West, in particular the U.S., pay the price. The easiest way to do that is, of course, through the price of oil and energy prices. But luckily for us, this isn't the 1970s anymore. The U.S. is now the world's largest oil producer. We still import oil internationally. It's not nearly as damaging as it could have been if we were still wholly dependent on foreign crude. So we're far more energy independent and secure these days. It doesn't totally insulate us from shocks, but it does help us blunt the sharper edges of what could happen.
Yeah, other nations have diversified as well. I mean, India, for example, has moved away from Middle Eastern sources of oil while adding others to the mix. We know that global markets are open this morning. Do you see any trends right now that might be a signal for the U.S. of what kind of week this will be?
Yeah, ongoing concerns. We talk a lot about oil now, but don't forget about the tariffs.